All right. Welcome everyone to the next session of Legacy Wednesdays. Super excited about today. Today we actually have our first guest, Whitney. So you should be feeling very special right now. You are actually our first guest on Legacy Wednesday. And this webinar series was created to help you reach financial independence and hopefully retire early. That's all of our goals. Nobody wants to work until they're 65, 70 years old unless they absolutely want to. So we want to help you build that passive income through commercial real estate. And today we're really excited because we're going to talk about how to invest in express car washes. This is something we are very passionate about. We're very bullish on because you're not only investing in commercial real estate, but you're also investing in an awesome operating business as well that generates monthly cash flow. So we're excited to have Whitney in the hot seat here today. Let's dive right in. On the next slide, you're going to see just a quick disclaimer. I just want to let everyone know, obviously this webinar is for educational purposes and it's not investing advice. And we always recommend that you speak to your professional network, speak to your CPA, speak to your attorney, speak to all your professional advisors before you make any type of investment decision. You want to do what's best for you. And this webinar is for educational purposes only. Real quick, just to jump in, just talk a little bit about Headway before we hand Whitney over the microphone. If it's your first time attending today or you don't know who we are, my name is Brian Alfaro. I'm the Director of Investor Relations here at Headway Capital. We are a private investment firm based in Houston, Texas. Our firm was designed to build and help protect the wealth of high-income accredited investors. So we want to provide our investors with investment opportunities that give you the freedom to do what matters most, right? And not to have to worry about managing tenants and toilets, as we like to say on the real estate side. We have a lot of experience in sourcing, vetting, and investing in alternative assets. I've been investing in real estate since 2018, started on the single family side, graduated over to multifamily, as I like to say, late 2019, early 2020, right before COVID, and have been in the investor relations seat ever since. I love talking to other investors and hearing about all their walks of life, all their journeys, and trying to see if we can provide them with a solution to help them reach their retirement goals. Our founders, Sid Shamim and Anam Omer, Sid started in the oil and gas space and started at Headway Capital back in 2017. We are also vertically integrated, so we started Headway Properties around the same time, and he has experience as an engineer in the oil and gas field. And then his lovely wife, Anam, is a GI doctor as a full-time as well. And she is very passionate about sharing this education, sharing this knowledge with other physicians, with other healthcare professionals that obviously don't know about these types of alternative assets. So last quick thing before I hand it over to Whitney, just a little bit about us and our track record here at Headway. You'll see on the screen, won't dive too deep, but we've been in the game since 2017, 2018. As I mentioned, we have a little over $500 million of assets under management, a little over 3,000 units. And you'll see at the bottom our target returns that we try to provide our investors. Our number one goal is to never touch any investments that don't cash flow, which I think aligns very well with our presentation today about car washes. So without further ado, I'm going to hand it over to the lovely Miss Whitney.
Awesome. Thank you so much. And it's such a pleasure to be here. I'm super excited to talk to you guys today about how to invest in express car washes. Before we get started, my name is Whitney Elkins-Hutten. I'm the Director of Investor Education here at PassiveInvesting.com. A lot of people ask me, what does that actually mean? Well, I used to be the Director of Investor Relations and Operations at a partner group with PassiveInvesting.com. And anyways, I have decided to let go of the capital raising side of things and just focus on working with the investors, helping them understand their goals, their risks, their timelines, and again, just talking them through like the different investments that we have available at PassiveInvesting.com, and making sure that the solutions that we offer match their needs. And so here's my contact information. Of course, you guys will be working through Brian probably for any questions related to express car washes, but I just want you to have my contact information there as well. For those of you who don't know me, I actually started off real estate investing in 2002 completely by accident. I bought a house with a significant other, and about a month later, the relationship fell apart, and I had a house and all the bills associated with that. So, quickly learned how to stuff that house full of roommates and complete a rehab. YouTube did not exist back then, so I had to go get this crazy thing called a book and learn how to rehab the property. And then we're talking green shag carpets, psychedelic daisies painted on the walls. It wasn't a place that I wanted to live in, but I wanted, definitely could see the vision of that place. 11 months later, I sold the property in doing all this work, nights and weekends, paying my friends in sushi and beer and pizza, and sold the property for a very handsome profit. And then that's when it clicked. I was like, I haven't been paying for my housing expense the whole entire time. So quickly dove into living, flipping, and house hacking, started building up buckets of equity, and then needed a place to put that capital, and started, transitioning some of these flips that I was doing into buy and hold investments. My husband and I, we scaled up a portfolio of about 36 single family units, transitioned and went into partnership on a 52 unit apartment building. And then I was told, if it isn't evident already, I was totally bitten by the bug of real estate. So fast forward where we are today, I've been a general partner on 10 deals. I've raised on over 29 deals. My husband and I still continue to make our own personal investments. Our personal portfolio looks about like this: 6,500 multifamily units, 2,200 self-storage units, 15 express car washes, and tons of other real estate and business private equity deals. But really, at the end of the day, it's not about the fancy numbers. What it's about is the result that you get. And so if you're here, I'm sure you're looking to find a way to invest in assets that produce cash flow and equity build, take advantage of tax benefits, but also offer that capital preservation, especially in such a volatile market. And really, at the end of the day, after all of this, you're trying to figure out how to get 100% control and choice on how you spend your time. And we actually, can do that at passiveinvesting.com as well. These are some of our stats for you. We have 1.4 billion assets under management and have had some pretty hefty returns for our limited partner investors. Now, just a quick recap, at Headway Capital, they have had they can help you do this too. This is what they're in business for as well. Now, today's topic, again, disclaimer, is for educational purposes only. Please don't take anything that I mention as financial advice, tax advice, or legal advice. I will certainly give you my opinion, and we can kind of pick that apart if you want, totally fine. But before you make any investment, make sure you, take this information to your team before you make that decision. Now, investing in car washes. If you've invested with us at passiveinvesting.com, if you invested at Headway Capital, you're probably very familiar with the multifamily space. And you're probably also very familiar that cash flow has been getting compressed. Even in the Houston, Texas area. I actually grew up in the Houston, Texas area, funny story, but it's been getting compressed over the past few years. We've seen a run up in asset prices, expenses have risen, and so it's harder. You have to be with a really savvy operator in order to secure a deal that has nice cash flow with it. But even in today's market with high asset prices, with cash flow compression, investors are still chasing yield. So where does that leave us to turn to? Well, we started seeing the writing on the wall with this way back in the end of 2018 into 2019. So this is not a new phenomena. We're just experiencing the pain now. This trend has been coming for several years. In about 2000, late 18, early 19, we were like, what cash intensive businesses are there out there that we could optimize and make kind of run similar to, say, like a self-storage deal or something like that. And we stumbled across like laundromats and then also express car washes. Now, express car washes is where we chose to focus our energy. And when we started diving in here, really, we needed to understand there are 4 different types of express car washes. I know I have 3 pictured here. The first is kind of like the self-service car wash on the right. So you drive into a kind of like a concrete garage, you drop your quarters or scan your credit card on the wall, and you get your brush and your wand, and this is a DIY solution. You're doing it yourself. Now, operational overhead, very low. You don't have any full-time staff, but customer service is also pretty low too, because the customer is having to wash their own car. All right. Now, we start kind of moving up the scale. Next thing, a little level up on customer service is the in-bay automatic. Now, these are the type of car washes that are associated with gas station, loop station, and they're really just a cost center for that business. Okay, they're not really standalone in and of itself. Okay, now if we swing the pendulum all the way the other direction and go very high touch, full service type car wash, they look very similar to an express car wash. Like you might drive onto the premise and you'll see a bay of 10 or 15 vacuums. You have an army of people ready to clean out your car, vacuum your car down. It'll go through a short tunnel. It'll get washed, really not many bells and whistles because the tunnel is really small. And then there's an army of people at the end ready to wipe down your car. Now, this is very high touch, high customer service. You get a very nice product out of it. However, the problem is that it's not very efficient. Okay, that type of facility can only wash about 100 to 150 cars a day, and it's very labor intensive. So we needed to find a solution that allowed us to kind of bridge the gap between efficiency and effectiveness. So that's where we started, seeing this express tunnel type of product spring up. Literally it feels like all over the place. Okay, and really it's not true. It's not all over the place yet, guys. We're in the very early stages of growth, and I'll explain those numbers here in a minute. But if you haven't visited an express tunnel car wash before, you're going to drive on the facility. You'll see a bay of, say, 20, 40 vacuums on one side. Now you can choose to vacuum your car out or not, or maybe you're paying for a high level membership where somebody vacuums the car for you. You're going to drive to the backside of the tunnel. That tunnel is going to be 60 to 120 feet long. Okay, now the longer the tunnel, the more cars you can serve. In that tunnel is going to handle everything: pre-wash, undercarriage wash, waxes, shines, tire shines. It's going to do everything. And it's very, consider it a smart tunnel. It's going to scan that barcode either on the app or, on the car. And it's going to know exactly what service that person whose membership is associated with that car, with that barcode, gets at that point in time. So it's very smart. So that is, and somebody who engages in this type of a membership, they can be off the property, their car wash is done in, say, 5 minutes. Whereas if you do a full service car wash, it's probably going to be closer to a half hour. All right. And also, I should mention, with the express tunnels, we can actually operate the entire facility with 2 to 3 full-time employees and wash upwards to 500 cars a day. Now, let's talk about the industry as a whole. Okay. So the industry as a whole, right now, the entire car wash industry, all those different types of car washes I mentioned, is a $33 billion and growing industry. And it's growing at about 3.9% annually. These are stats that you can check on carwash.org. Now, the express tunnel sector, okay, that very specific sector, is growing at almost twice that clip, at about 8% a year. Now, let's talk about the customer. Who is using this type of car wash? Okay, why would we be focusing on this as an investment? Well, the customer is really anybody that has a car, quite literally. And when you look at the stats, about 91.7% of households actually have one car, and then over 20% of households have 3 or more cars. So, a lot of people, when they ask me, where do you start, building your portfolio? I'm like, of course, I love investing in housing. But then the next thing I look at is, what do people need? And they love their things. Okay, it makes self-storage, very viable next investment. And they love their cars, and they probably take better care of their cars than they do their house. Funny enough. Why is that? Well, from a behavior standpoint, that car, your friends see you out in it, your coworkers see you out in it, you're running the kids around. It's an integral part of their life. All right. So other people that own cars, 72% of them actually use a car wash rather than washing in their own driveway. And right now, currently, with no influence from the express car wash industry, over 51% of those people who use car washes prefer an express car wash. So you can see, just out of the current market share, over 51% already belongs to an express car wash. Okay, the other remaining is divided up between your full service, your in-bay automatics, and your DIY locations. Now, the average user or owner actually washes their car 13 times a year. I object to that personally, because I'm the type of person that will wash their car only 2 times a year. My husband's the type of person that would wash his car every single week. Maybe, like, if we're averaging it all out, we come out to 13 times a year. But the point is, once it's an established behavior, like in the case of my husband, it's an established behavior for him. Once it's established, people do not let go of it. And we already have data to prove that it's a very recession resilient type of business, because people have to take better care of their cars in hard times. Why is that? Well, we saw the case in COVID, like, lending dried up almost overnight. There weren't any cars to get, so people actually had to take better care of their car in order to get to the next part of the cycle where they could trade up into a new car. Now, this is an industry that's really ripe for disruption. Okay, so it's a newer industry, all right, but it is back to self-storage in 2006. And let me kind of like draw some through lines here for you. Okay, so right now what we have are a lot of mom and pop owners that have gotten into the space, and it's very fractionalized. They got into the space, they probably invested anywhere from $1.5 to $4 million to build just one location. Now, they were thinking that they were going to build these locations and be able to scale themselves out of it very quickly in order to have essentially a cash running business. Well, not the case. They need to get to 5 or more locations before they can actually hire a regional manager. So only 15% of car wash owners have been able to do that. So that leaves an 85% of the current express car wash market share for us to be able to compress and consolidate. One of the reasons why this never happened, that scaling up never happened, they can either scale up to 5 or more locations, hire that regional manager, or bring on third-party management. But there are no third-party managers. We at PassiveInvesting.com have scaled the first third-party management company, which is HRA Management. Okay, so that's a little bit about where we are in the consolidation cycle. We have the ability to disrupt the optimization and the scalability of this asset. Okay, right now, express car washes are amazing. They're a highly optimized business. They already inherently have 40 to 60% cash margins, but there's a ways to go. Majority of the assets we're picking up, the owners are paying somewhere between $1.60 to $2.63 per wash. Okay, that just includes the chemicals, the electricity, the water. We're able to actually optimize our functions to get that wash down to 83 cents per wash. So there's a huge way for us to be able to disrupt this environment. All right. I also want to talk about another way we can disrupt this environment. Right now, a lot of express car wash owners are still charging just single pay. So, they're having to attract a customer and keep that customer and hope and kind of cross their fingers and hope they come back. Only about 14% of the people that are coming to their location actually have a membership. So why not move these customers from that single pay model to membership model? Now, kind of the natural next question an investor asks, well, like, what's the cost of doing that? Like, what prevents them from washing their car every single day? Essentially nothing, but you and I both know we don't have the time to wash our car every single day. The average customer actually only washes their car 1.8 times a month if they have a membership. And if that membership costs a minimum of $25 upwards to $45, they're washing 1.8 times a month, and that wash is costing 83 cents per wash. You can see now we have a very nice, healthy margin in there to, pay for the employees, pay for the capital expenditures, but also pay our distributions to our investors. Okay. There's another opportunity here in this space, which is to scale up through our third-party management company, that HRA management company. Because of our buying power, we already have 30 car washes under ownership. We're able, if you went out and tried to buy a car wash on your own right now, the ask would be 12.5 to 15x EBITDA, or the profit of that business. because of our buying power, we're down close to purchasing. Our average right now for the past calendar year is about 10x EBITDA. So we're making money on the buy, much like you want to do in multifamily or self-storage real estate. We do direct ownership, no franchises. We own the land, we own the brand, we own the third-party management company. We are vertically integrated. And there's really 3 exit plans to this business, and we'll talk more about those in a minute. Now, I always kind of like pivot a little bit and talk about hedging inflation within express car washes, but I'd like to mention that this is a good inflation hedge because of the cash intensiveness of the business, but also because of the nice lending terms that we can put on the project and let the devaluation of the dollar erode away that asset. Okay. But I also like talking about all the other wealth pillars, as I put it, like how does this asset help preserve the capital, preserve cash flow, grow the equity, what kind of tax benefits it gets you, how, talking about that inflation hedging, the smart use of leverage, and we'll talk about our last rule here in a minute. But how would you invest in a car wash passively? Okay. Well, first of all, you want to be in a high growth market, very similar to like multifamily or self-storage. You want to be in a market where the jobs are growing, incomes are growing, population's growing. You have all these investing cards being stacked in your favor. For us, we see that as the East and Southeast. But it's not just about being in the right market. We want to be in the right market, in the right sub-market, on the right street corner, and making sure that we are in the right direction situated on that street corner. I call it location, 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 and then location. Okay, so for us, we like looking at A-class assets, okay, on the right submarket, on the right street corner, and that street corner has to have at least 20,000 vehicles per day, ideally making a right-hand turn into that facility. Okay, so those are some of the metrics that we're looking to that if you're underwriting an express car wash that you want to, make sure that you've got on your radar. So how do we protect the cash flow of this asset, right? Like if you had this mile-long due diligence sheet, like what are those points of the due diligence that are actually helping you suss out the cash flow of the asset, whether it's being protected or not? For us, we're solely focused on that express car wash sector, no other sector, for a variety of reasons. Primarily because all the different ways we can disrupt the environment, increase the income, decrease the expenses, and just make it run far more efficiently. But also, we're also very focused on making sure that we are the direct owner and no franchises. We own the land, we own the brand, and we own the third-party management company. And the reason why I feel that's very important is because when you get into franchise ownership, if 2 different people, and just think about it, Quiznos. I'll pick on Quiznos for a minute. One side of town might have had a great Quiznos. The other side of town, the Quiznos was kind of like, not so hotly run, right? The customer only sees Quiznos, all right? So they don't care. The two stores are associated with each other. Okay, so we want to sidestep that. Also, if you have 2 people that have ownership in the same franchise in the same town, you could run into marketing issues throughout the market share. Meaning one operations might not be able to, market to on the west side of town. The other, operation might be able to only market on the east side of town. When you have a direct ownership, everybody, all the facilities in that market benefit together. Tax benefits. Okay, this is one of my favorite because depreciation is there can be really high year 1 depreciation. Okay, so not only do you have the normal depreciation, we can perform a cost segregation analysis and accelerate the depreciation forward. We can take advantage of the bonus incentive of bonus depreciation. Combined together, that depreciation usually ends up to yield a 70 to 90% year 1 loss for investors. Okay, and that's a paper loss. For those of you who've never invested in passive real estate before, that's not a real loss on paper, a real loss, but actually a paper loss to help you shield the income from the asset. Now, why is this? Well, that building As we can see in our storm car wash that we recently took over, that building is a piece of equipment. We can depreciate it like a piece of equipment. You can't do that in self-storage state, right? Inflation hedging, we can lock in excellent debt on these type of properties. We can optimize the equipment and systems to allow for a good adjustable, operations. Meaning, if before we even have to, manipulate the subscription cost to the customer, we can actually impact operations, lower our operational expenditure by just, how quickly does the tunnel run? How much chemical and water is it using? How much electricity is using? There's so many ways we can impact the business operations before we ever have to move the cost of the membership. And then, one of the best ways that we can hedge inflation is really moving that customer from a single pay model to a subscription model. Okay. Now, how can we invest, passively? Equity growth, again, no third-party management, no big money is in the space. We're in this very weird kind of arena with early market consolidation and leveraged buying power. Blackstone, they don't, Berkshire Hathaway, they don't want to get into this right now, into this market, because there's no third-party management. Okay. We can take advantage of the 3 EGI levers, very similar to what you hear in multifamily real estate, the 3 NOI levers, which is how can we increase income, decrease expenses, and add additional streams of income. And then we really have a path for 3 types of exits on this property. We can do individual sale of every asset. Okay. So that's the most conservative way that we show our investors is, if they invested in a portfolio of assets, what does that look like when that portfolio of assets exits? We could do a large private large private equity roll up. Okay, sell all the assets together to a large group like Blackstone, or we can do an initial public offering. Each one of those exits has its own equity multiple profile to the investor, but we show you the most conservative one, which is that individual sale. And just to kind of let you know, that equity multiple around there is about 2 to sometimes, depending on the portfolio, 4x equity multiple. So nice equity multiple there. But at the end of the day, you have to invest with an expert. It's like anything, okay, in passive investing. You have to invest with somebody who has knowledge of the strategy, has the expertise and track record to perform, the ability to secure credit and lending, and be able to reliably pool investor capital, and has that team ready to work on your behalf. Our HRE management team, we're up to over 200 employees working hard for our investors and for our customers. All right, guys, I'm nearing the end here, but I just want to kind of give you an insight into our overarching strategy on where we're looking to grow this portfolio. We're looking to scale, on here on the right is our current portfolio, 30 car washes, under management. All right. But we're looking to scale this portfolio through acquisitions and development. Okay. So over the course of the next 5 years, we're looking to get up to 150 to 200 locations in those growth markets with those high traffic counts where we own the land, brand, and the third-party management company. Now, we're going to look where we can to continue to acquire currently operating businesses, but we want to make sure that we also are in the right place where we don't have a huge amount of competitors in like a 1 or 2 mile area, which means that we are going to do a hefty amount of development as well. And you can see here on our assets under management, we've got that PIC Development Fund 1 that closed last October. Those 2 assets are getting really close to roll into an acquisition fund. So we're super excited about that, but we will continue to develop our own land as well. But when we get into the numbers that you see here are like when we have the operational side of the portfolio, okay? If you invest in an operating portfolio, one where we have current acquisitions in there that are performing, we generally have been offering a 10% preferred return, 12 to 15% cash on cash by year 5, And, nice waterfall for our investors. We make sure that our investors are continuing to stay alongside with us the entire life of the project. We've got that 70 to 90% year one loss. And then, we can see the different equity multiples that we're projecting based on how we exit. But the most conservative one that I always want everybody paying attention to is that individual or portfolio sale. Okay. Because really, if you're happy with those numbers of the individual and portfolio sale, you're going to be really happy for us when we knock it out of the park. All right, Brian, that was a lot of information in a very short amount of time. I see we have the little red dot under Q&A. We've got some questions coming in, so I'll let you go ahead and work through that.
Yeah, awesome information, Whitney. If it's your first time hearing, it's your first time hearing about express car washes, I think this information can be a little bit harder to absorb. So I would encourage people to go and do their own research. I know you have some great articles on your website, Whitney. We have some great articles on our websites highlighting the benefits of investing in express car washes. And this is a newer asset class, but I can tell you, having been in the space and partnering with passive investing, that it's definitely a lucrative asset that our investors are very happy to invest in. So great stuff. If you don't mind, I'll start going through these questions and we can kind of either you could tackle them or we can kind of tackle them together. But let's just run through it. I'll answer this first one. And you probably have some good insights on this, Whitney, but how operationally intensive are express car washes?
So the operational side, it's, we got 2 to 3 full-time employees, once they're optimized, that run the location. I think the heaviest lift is like, once you take over or open a car wash, because you're going to want a full-time person standing there trying to get people on those subscription memberships. Like literally when the person drives in, you want somebody standing there going, hey, well, let me run your credit card for you. And by the way, we've got this, offering for, like $1 wash, right, for the next 2 months or whatever. But past that, all the work is really, truly on the tunnel. And that's what makes this investment beautiful, because, we are looking to invest. And it's one of the reasons why we're, really looking to do a lot more development, is that we're trying to get high quality equipment, which just de-risks everything for the investor. Because when you got a high quality tunnel, it doesn't really break down. You just have to maintain it.
Absolutely. And I think the beautiful thing, in my opinion, about express car washes that I really like is they sit in that nice in between space, right? You've got your fully automatic, which have no people, but those don't make as much money. Think about like the coin operated kind of, either spray your own car, or maybe you're driving through the one at the gas station, which I don't think anybody really loves because they know they're not very well maintained. Those are not very labor intensive, but the quality is very low, right? They're kind of like 911 if you absolutely need a car wash and there's none around. But then you've got the full manual ones where, as you mentioned, you're waiting 30 minutes. Well, I've been to one of those before, and there's like 10 or 20 people working at any given time. They're very labor intensive, right? So you have different operational challenges. With the express side, it's a nice kind of in between spot, right? You don't have 10 or 20 people working. You might have a general manager. And if you have several locations, you have a district manager kind of overseeing multiple locations. But then you just really have 1 to 2 people really making sure that they're selling memberships and making sure everything's running really smooth and they're keeping the parking lots clean and things of that nature. So it's that nice sweet spot. And that's what I love about them. But awesome. So good question here from Mr. John. How long are the hold periods typically for car wash investments?
Yeah. So, for us, we're looking to our projections. We kind of our performers are at 5 years, but we're looking to acquire that portfolio. So this is really a different type of investment strategy. So it's not like going into a multifamily building where you're gonna, exactly, I'm invested in building A. We're gonna hold it for 5 years and then we're gonna exit, or whatever time between like 4 and 7 years when the timing's right. With this particular portfolio, we're looking to scale to that 150 to 200 car wash locations. And then going, okay, let's stabilize this and do what we need to do to either shoot for the moon, which is that IPO, or land in the stars, which would be that large roll up exit to a private equity group. And then, we always have that the model built out for individual sale of those performing car washes. So this is really designed for the investor that sees the opportunity here to, during the hold period, that they see the opportunity to invest in an asset that is, ripe for disruption, has great cash flow to it, also, gets amazing tax benefits, has that nice equity bump potentially on the back end, but also, is like, well, if we do IPO, that would be really sweet.
That would be really cool. I think there's a great saying. I can't remember how it starts, but it's like, cash flow will keep you out of a job, but equity will make you rich. And I think that's, a great way to kind of look at these car washes, right? There's so much upside on the equity side, on the exit, especially with the space growing so fast. The cash flow is nice, right? It's not definitely awesome in my opinion. But you're really looking at that equity multiple. And if we can exit to sell the portfolio to a big private equity group and they want to buy the whole thing, or if we IPO, I think investors are going to be very happy. So it's worth the wait, as I like to say.
Awesome. Yeah, if you're looking to exit in 2 years, there's probably a better investment for you. But if you're understand the investment and are ready to ride this ride with us, I think it's going to be an amazing one.
Awesome. It's a good question. You mentioned that the space is growing. How do you stay competitive and separate yourself from the competition? I know you mentioned location. That's a big thing. I know you probably want to highlight again, but anything else that maybe you're doing behind the curtain or operationally or from a service standpoint to really drive traffic to the Hurricane brand?
Yeah. So one, you got to buy right? The location, right? You got to be in the right sub-market, the right MSA in the right sub-market, on the right street corner with the right traffic count. So that's objective number one. Then we look to pride ourselves, the founders, Dan and Danny, and they're like, we want to be the Chick-fil-A of car washes, which for me, I'm just like, I don't do Chick-fil-A. We don't have one in our area. So I'm like, okay, I kind of get it. But if you're from the East Coast, you probably do, which is, it's quick and it's yummy and it's great. And they have amazing customer service. And, you can't deny them that. So that's what we want to do. We want to be, stand our brand out from everybody else, just knock them dead with customer service. Now, there are a lot of other car wash brands out there, but one of the largest challenges they have is being able to scale at such a rate as what we're scaling to where they achieve the volume discounts that we can get with chemicals, just cost equipment replacement. They just can't rival our operational expenditures. Okay, they're hovering about $1.60 per car wash. We're down to 83 cents a car wash. So that's a huge savings. That's almost a 50% reduction. Yeah, it's huge. But even on top of that, a lot of other places, brands, you have to pay to use the vacuums, or you have to pay to get additional scents. We include those all into our membership. They're included. Okay, so that helps us stand out from the competition. And one thing that we do, and that I think is very unique, is on some of our locations, we've taken, it's just really like a $200 to $500 capital investment and put in a dog wash. I have an 80-pound puppy, and what is the worst thing you can do is, put a dirty dog into a clean car. So, that's just another value add that really sets us apart.
I love that. That's a great idea. I know if you've got a dirty dog and you can hose both your car and your dog off at the same time, why not, right? Awesome. A good question here. A lot of the portfolio you shown was in Texas. It's out of Texas, sorry. Are you investing in any car washes in Texas?
We are currently, entering that market. None of those assets have currently closed. So, but it is a market. We're looking to expand. Right now, we're in the Southeast, East and Southeast. So think Maryland down to Florida and then into Alabama. Those are all of our closed assets. We'd look to make this a national brand, but we want to build it very thoughtfully. And make sure that we are scaling appropriately. Right now, we are focused on keeping our assets within 2 hours of our home office. Entering the Texas market would be the first, would be a little bit further. And like I said, but when we enter the Texas market, now that opens up, a large portion of the Midwest for us.
Right. Love it. We'll take one more here because we're almost at 45 minutes. We want to be respectful of everyone's time. Last one here is, when can we expect to see a future car wash offering from you, and how often are they open for investment?
Yeah. So Great question. I keep saying every day, any day now, we want to take care to be very diligent in our underwriting. This summer we had several assets under contract. And long story short, we decided to let some of those assets go because of when we got further into the due diligence, the underwriting, the financials weren't represented correctly, or the seller didn't tell us, disclose the permitting and the competition in the area. We walked away from those assets. So we're, taking all strides, taking all those lessons learned to make sure that we are acquiring the best assets in the best location. So if that takes us 2 weeks, fantastic. If it takes us 2 months, that's what it's going to be, because our number one objective is protecting investor capital.
Absolutely. That's the number one rule in real estate, right? Is don't lose money. And then right after that, we all want to make money, right? But you definitely got to make sure we protect our investors' hard-earned capital and our money too, right? We're all putting skin in the game. We're all investing in all of our projects. So I know I personally don't want to lose any money. I know you don't either, Whitney. So it's definitely always about protecting our investors' capital. So awesome. Well, I want to say thank you to you, first of all, for being our very first guest on Legacy Wednesdays. Hopefully you remember this being first. I'm not sure if you've ever been first on somebody else's podcast or anything like that, but very, very exciting. Thank you again for joining us. Any final words?
No, just if you have any more questions, definitely reach out to Brian and his team. And, my contact information is here. This is an amazing asset class, and, we're just getting started. As you can tell, we're only 30 units into that 150 to 200 unit scale. And so, there's an amazing ride ahead of us.
Awesome. Awesome. Super excited. Thank you everyone for attending Legacy Wednesday in today's webinar. We look forward to seeing you next week. Have a great rest of your day.